So something just isn't adding up today, and this is what we're going to talk about. Conflict in the Middle East usually has the stock market drop and sometimes crash, but usually what we see is people move into safe haven and bonds, mortgage bonds, and pushing down rates. So today, unfortunately, mortgage rates are actually spiking, the stock market's plunging, so what's actually going on? So I'm sitting here scratching my head trying to figure out what's going on. I think I got it. So in today's video, folks, I'm going to hopefully explain to you guys what's going to go on with these and the whys behind it based on conflict in the Middle East, the stock market plunging, and also the bond yields plunging as well. So, folks, my name is Dan Frio. I'm actually a mortgage advisor licensed in all 50 states as well as Puerto Rico. My goal today is to help explain to you guys with all this stuff going on, what's going to happen with these today and this week, and the whys behind it. So I got to just give you a little bit of backstory on me. I've been doing this for 35 years. And the reason why I'm telling you that is I lived through a lot of these conflicts. Okay, Desert Storm was one of my first conflicts that I was involved in the mortgage business when it happened. And it was kind of an eye-opener. And I'm going to explain that story to you a little bit right now so you can understand how conflict in the Middle East usually has mortgage rates plunge, but today they're actually going to go up. So hopefully I can explain to you the whys behind it. So let's get over to it. So folks, back in, it was 1990, I want to say, and when I got in the business. And the first experience I had with war when I was in the business environment was Desert Storm. And that was my education on what the markets do during conflict. So at that time, we saw the stock market plunge, and it was like, whoa, okay, I get it, because there's conflict throughout the world, and people are like, okay, I'm uncertain about things. But then what you saw is people moving that money to where? Well, they moved it to bonds, and that was intriguing, because I was just out of college. I kind of understood some of these things, but I didn't really live it real life. So I'm like, okay, conflict in the Middle East, the stock market plunges, and people take money out of the stocks, and then they buy bonds for a safe haven so they can make money on their money. I'm like, okay, that kind of makes sense. So then I lived through another one, then another, and that one, it just kind of repeated itself. So over the weekend, when all this took place, I'm like, okay, even with high inflation numbers that we got on Friday, and I called that one, I was like, okay, this should be really good news when it comes to mortgage rates. Well, it's not. So today's video, I'm going to show you how the stock market's dropping and the bond market's dropping as well, but I think I have the reason behind this. So let's get over to it. So here's what we got on Friday. We're going to talk about the war in a second, but on Friday, we got this number down here, and it's a PPI. This is producer inflation. Well, if you go back to Friday's video, hopefully I'll put it right up through there. I said, well, the number, I think this was 0.3, but the number I think was 0.3, but it came in at 0.4, the previous number. Okay, the analysts expected it to come in at 0.3, and I said, don't be shocked if it comes in at 0.4, maybe even 0.5. Because I think inflation on the producer side is going to keep going up a little more based on the January effect. What's the January effect? Well, we're in March. I know you don't have to comment down below, hey, Dan, we're in March. But here's what my thought is. And here I talked to a lot of people in the industries. And here was my January effect. Producers couldn't push their price increases to us in 2025 because of all the stuff that was going on. And they knew the big, beautiful tax bill passed, and the average person or average family would get an extra $1,000 or $2,000. So they're like, okay, we'll push over our prices in 2026, and then that'll get absorbed and so forth. Well, it's faring well with this prediction when it comes to the PPI. This is the producer inflation. So I know it's March, but that it takes time to build its way through. So we should have started peaking right about now, but the conflict in the Middle East is going to throw a little bit of a curveball in that, because you're going to see oil skyrocketing. That's going to push up these numbers even higher. So now you have inflation most likely is going to be even higher than expected because of oil. So if you're the Federal Reserve, you're like, there's no way I'm going to cut rates. Then if you're a trader, you're trying to move your money around. You're like, okay, do I buy bonds? What do I do with my money? But the reason why I think a lot of people are just sitting on the sidelines with their cash is this. Stock market's down. Yeah. But I don't want to really buy bonds because this thing could be short-lived, 48, 72 hours. So I'm going to put my positions into cash so I can absorb these, watch people dump stocks. Don't relax, folks. It'll be okay. Don't sell right now. And as people sell, and the conflict resolves itself, and the people move their money right back in. And again, it could be 2 or 3 days from now. Okay, so that's my thoughts on this. That's why people aren't diving into the bond market, because of that high inflation number that we got on Friday. So let's get over to now what we're seeing in the bond market. Bonds are down 29. Okay, remember I always say you got to look at that number up there. If it's green, good news. Mortgage rates are coming down. If it's red, it's bad news. The bigger the number, the bigger the move down. So you're going to see mortgage rates jump on this today, okay? Let's get over to this piece of the puzzle. This is what the Federal Reserve still monitors. This is what the economy monitors. They're like, okay, inflation with the PCE and in the jobs report. Well, jobs are okay, but we have inflation, especially if you go back to Friday's PPI number. It's almost twice as hot as is expected. So then the Fed's not going to cut rates. So if you're looking to move your money to bonds, you're like, oh, that might not be a good safe haven. I'm just going to hold cash now and then move in the direction of what I think is going to happen next. That's what I think is going to happen. Okay, so let's get over to the economic news we have the rest of this week. So last week we got the producer inflation. It came in what I said. It came in hotter than expected. Analysts said it was coming in lower. I beat them again. But let's look at this week's numbers and what we can kind of take out of this and to figure out how's the economy going, because I think the Middle East issue, hopefully it's very short-lived. Hopefully by the end of this week it's done with, or in mainstream media at least, and then they can start working on things behind the scenes, and then the markets can stabilize. So let's get over to the economic news we have to focus in on once the conflict ends. So on Monday, today, we have some information coming in, manufacturing numbers and manufacturing PMI. We'll get to that at maybe the closing bell. That's coming in here shortly. But then on Wednesday, we have the ADP numbers coming in, and that's 22,000, they said. Maybe it's going to go up to 49,000. So they're saying that the jobs market is pretty good. Thursday, we're going to get initial jobless claims and continued claims. We're going to make sure this isn't upticking and the continued claims don't keep going up. But then we're going to go down through here, and now we're going to get the new unemployment rate. Okay, so the Federal Reserve watches what? They watch inflation and the jobs numbers. Well, if you have jobs with an unemployment rate under 5, which 5 is full employment, they're saying, okay, the jobs report's good, but inflation, we got the PPI on Friday, it's twice as bad. So we're not going to cut. Want me to prove it? Well, let's get over to what the Fed's going to do in 16 days. So the Federal Reserve is going to meet in 16 days. What are they going to do? What would you do? Inflation's almost 3%. They wanted it at 2%. Jobs market's okay. GDP's good. We got the big, beautiful tax bill, putting more money in people's pockets. But we had the conflict in the Middle East. So once the Middle East resolves itself and it shortly ends, hopefully, in 16 days, the Fed's going to meet. What are they going to do? They're not going to do anything. Would you be cutting rates? I wouldn't cut rates. I would think this was 100% chance the Fed's not going to cut rates, and that's basically what this chart's telling us. So they're saying they're not going to cut rates at this coming meeting. They're not going to cut rates at the next meeting. Then we'll talk about that at that time. So what do you do? So if you're a homeowner, what can you do? You're a home buyer, what should you do? Well, if you're a homeowner and you're trying to think, okay, can I time this thing to refinance? Or you're trying to refinance right now, what should you do to, make sure the numbers work for you? Well, folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I'd love to be able to help you. If you're looking to refinance right now, put your information right up in there. RateWatch 2.1. All I want you to do is, I want 2 pieces of information from you. At what rate would you be interested in refinancing? I'll call you, text you, and email you. Or how much of a monthly savings would you be interested in? So you could say, Dan, if I could save $300 a month, call me, text me, email. I don't sell the data, folks. So it'll be me, Tony, or Alan reaching out to you. What if you're in the process right now and you're like, hey, Dan, can you look at what I've been offered, see if you can get me better? I'd love to do that. I just put up their rate or loan estimate review. Upload your loan estimate in there. It's the 3 pieces of paper you're going to get with that application you got from that lender, and let us review it. If we can save you money on the rate and the fees, hoping to win you as a client. If you're looking to buy, I'd love to help you as well as with that as well. So folks, my slogan here is this: one application, one credit pool. We're going to compare your loan with almost 40 other lenders. How do we do that? Well, the bank I work at, I'm licensed in all 50 states, but we're also set up with almost 40 other lenders to ensure you guys are getting the lowest rates and lowest fees in the industry. So check it out. Upload your information here, give us a call, schedule a consultation, but make sure you subscribe to me so each day when I come in and explain to you guys what's happening with these, you can understand a little bit more. And especially if you're a loan officer or realtor, when your clients ask you what's going on with these, maybe now you have a little more of an educational explanation for them instead of that mainstream media garbage that they kind of throw at you each day. So thanks for watching. Have a great day, and I'll be back here at the closing bell because it's going to be an action-packed day, and I want you guys to stay informed. So take care. Have a great day. I'll see you at the closing bell. Hope to hear from you if you're a homeowner or home buyer, because we'd love to help you navigate home ownership. We're trying to save some money on that refinance. Thanks for watching. See you next time. Bye-bye.